Hey, good afternoon. We had an interesting session today. We had a really nice jobs number that came out. Market really rallied up, loved it on the 7:30 a.m. bar, and got up to the daily three right after, I would say 9:15. Is that right? 9 o'clock, and then just rolled over. And that's never a good sign. The daily open three was on top, and we couldn't even rally to get up to the daily open. So, you were on the open and not the close. We couldn't even get to the daily open three, and it rolled over. So it's looking weak. And the reason for the weakness isn't, they're going to say the ADP number was not the same as the jobs number. Well, it's not been the same as the jobs number for years. I mean, it's never tracked. So that's kind of a crazy argument. And so they're saying that the jobs number is political, but the ADP number is real. Well, the ADP number is doesn't have not everybody uses ADP for one thing, right? In fact, I would argue that not even a half a percent or 50% out of 100%. It's just a segment of ADP, that segment. Um, many people don't use ADP. So it's kind of a strange argument. And the non-farm payroll is a survey, and they use the same participants for the survey. So also, the survey indicated that private non-farms were wonderful. We're hiring government employees anymore. And that was what I was going to be concerned with, because they're not hiring the government people, and the government people left the building with Elvis. So they're not replacing them. And so I thought we were going to get a bad report for that reason. But healthcare and hospitality saved the day. Healthcare added like 60,000 jobs, and hospitality put in a very respectable 36 or 38,000. And why is that important? Because hospitality and leisure, that is your consumption. That's your first sign of life, really, that people are starting to travel and go out and eat in restaurants and spend money. So it's showing a healthy economy. It's actually showing GDP growth. So the manufacturing lost some jobs, but again, it's a survey, and we had the tariffs and all that in this survey, so it's a skewed survey. I'm not so worried about that, but I'm very happy about the travel and leisure and healthcare. So all in all, it was a good report, and especially the hourly earnings were good. People are getting paid, and that's what we want. We want the working class to be paid. You don't know how many years, a decade really, that everybody worked and couldn't quit. There were no jobs, right? To get rid of the crazy boss and get a better job with a higher salary. There were no jobs to go to, and there were no bonuses or pay increases for a great majority of the regular working class out there. So this looked really good. So this is in line with very healthy, I think, realistic jobs report. The ISM manufacturing was disappointing, and I'm going to take that as a one-off for the tariffs. Jolt had some great job openings, data scientists, a lot of jobs for technology related people. And then Where was my ADP? Right here. Or was that Wednesday? I'm looking for it. Hang on. There it is, Wednesday. So ADP showed 37,000. And I think this is your government jobs right here. This is where the government jobs showed that decline. That's what I think happened. In fact, if we want to drill down into that and find out, well, I'll drill down to that this weekend and let you know, because I am curious. I think that the ADP jobs probably went to that's that government workforce reduction. A lot of that because we really haven't heard of the workforce reductions like we had been hearing forever and ever and ever under the previous administrations, where the private jobs just disappeared and weren't brought back. So, seeing that hospitality and leisure increase got me excited. So, it means people are out spending money. And that's what you want for a healthy economy. People have jobs, they're working, and they're spending money. So, hopefully, it was a first sign of life. But, Wall Street is sitting in the money market funds and not participating in these rallies at all. In fact, they would rather the market crash back to the lower end of these levels by the end of the month, end of the quarter. So 5780, 57, somebody even said 5700. That would be the quarterly ones. The monthly ones are currently between 5763 and 5901, or excuse me, 5801. 5801 and 5763. So, yeah, possibly 57 for if we get below those monthly ones, but that would fill that gap. If we got down here, they're going to want that gap. So I can see that. And that quarterly one will be where they move their risk to 5696. And where is that gap fill? Right there. 5688.50. What was the close actually? 5678. A little bit lower for the close. But the high is up here. Excuse me, but that close is down here where it gapped up from off the close. So that is where they're looking, just FYI. And 6034 sitting on top. You remember our quarterly um, mean uh, has shifted a little bit. It shifted lower. So I think the market is also going to roll over. So we might, be sitting here looking, pretty soon 60-60, 60-34 on the quarterly, 60-34, 60-60 on the monthly. So monthly, quarterly are tracking. If we get any further upside, it won't be very much, and start looking for that turnaround. So they did block the weekly one, stopped the sell-off, or I think it would have continued. Certainly, the Wall Street crowd wants to sell this market and run back to their 4.5% interest rates in the MMF account, which is crazy. Um, but anyway, it is what it is. So expect a little bit of downside going into next week in the week of OPEX. The week of OPEX, the 18th, the VIX. Um, Interestingly, we have a 21 max pain for that contract. So right now it's 18, but June 18th expiry for the VIX, it's 21, which is going to bring the market down. You see what I'm saying? So you can't have a 21 VIX with the market going up on this weak market. This was not long vol long on that. And they just, suffered through having to sit up here on these daily highs as it was, but it was weak. It did not hit the daily 3 open. It only got to the daily 3 close, right to the tick. Both Infinitus and I had the same level. So when we match, it's really a strong level. So that was one good thing of monitoring their signals. It was a confirmation of my levels. So very good. 1653 didn't get tagged. That was our 23-day one. Could get tagged Monday. For continued downside, the 30-day one is below it at 1478, but I don't think we're going to get there. I think the 23-day at 1653. And we go back to 18 and then 21 could be. For open interest on the current contract, I'll just put both of them up. You just do it by strike. Hang on a second. The high negative is at 17 or 18. So it's going to come back up. I mean, this is going to be spit right back up like a baby's pablum. 17, and then a high positive open interest, the GEX is at 21, maybe 22. Open interest change. I just can't wait to show you guys. Yeah, 20 is already stacking high. I mean, the open interest change, the money is going into 20 right now for VIX. Wow. Okay. Yeah. Y'all be careful out there for your bulls. I'm going to play Hole next week. They actually have a few good songs, but I thought it would be fitting since I'm ranting about the hole that they're putting our market through. Um, we should have been flying today. If this had happened during the Fugazi of the past, reports past, as I call it, it would have been at least 1.5 times the range day, which is like way up here. So I don't even have my tail on. Let me show you what that looked like. So here's 1.5 off the close. And then here's 1.5 off the open. So it would have been 6,100, 6,104 to 6,112 to get to 1.5. That's where we would have been had this been any other president. Um, Even if Biden had passed those tariffs, the market would have been up there. You know what I'm saying? It is so jaded and tilted. They have the entire BlackRock ETFs controlling our equity indexes now. Because all that money left the Dow, the Buffett crowd. The Dow did not, the Dow has not performed relatively at all for volume. Um, Relative volume has not performed compared to the other markets. And in fact, I can do an analysis of that and prove it to you. Um, they have been sitting in the repo market for Mr. Powell because the foreign investors have not been there. I posted something on my Twitter today showing you that there was the highest amount in history ever. Treasury had to buy back its own debt this week because of the lack of interest of our foreign central banks. And we spent decades, decades supporting them, and they pay us back by abandoning us. Abandonment. I feel like an abandoned redheaded stepchild. They abandoned us when we try to bring back our manufacturing. Largest in history of the amount that the Treasury had to buy back its own debt because of that abandonment by the central banks after we've given them $10 trillion to make sure that they're okay and they got through their crises and that they held up their economies and they are all right. So they're all right today to dump our markets, dump our debt, and run to China. It's crazy. I'm sorry, but that's abandonment. All right. I mean, with friends like that, who needs an enemy? We should just get stable coins and sell direct to the consumer, and they will buy it. I bought those double E's. I mean, I was a secretary paralegal. Yes, I had 401ks, but I mean, every time I went to the bank and deposited my paycheck, back before the days of automatic drafts and all of that, we would go actually to the bank each week. I would pick up double E's and stick them in my drawer, and I had like drawerfuls and would hold them and hold them and hold them. And I ended up giving them away after, 10 or so years, 15 years to my nieces and stuff like that. And I wonder if they've still got them. I told them to put them in their drawer and don't, you know, cash them in. So, the poor man, working class version of, savings bonds, that's what they were. And we don't have anything like that today. So those stable coins where you put a treasury back or a gold treasury hybrid version of that, people are going to collect those as collector's items and they're going to put them in their drawer. They're going to hold on to them and they're going to buy them every week or every month. And that can be bought worldwide. We can go direct to the consumer anywhere and help people invest and save for their economies. And then the government, my vision, like Bitcoin has, the halving, they announce it, we can announce, once a year or once every 6 months or once a quarter, whatever it ends up being, where the government comes in and buys, instead of buying 10 million shares of our debt for Powell, let's buy, 10 billion shares of our USDT and USDC, and that will prop it up. right? We can even do a Bitcoin hybrid one and then come in regularly with Bitcoin purchases to prop it up, make sure it, is all, and then people will time their purchases along with, they do with the halving or the government, purchases so that they can ride the wave and then get in on that momentum. So, I mean, there's definitely ways that they can do this and keep people invested in it and keep them buying. I think it would be very successful. And I think other, central banks would want them also. So, attract them back to our capital. Right now, what the China is offering retail customers into their gold exchange, Shanghai, and the CME raised the margins for Shanghai gold over the COMEX gold. Saw that today. So that's good. They're doing something to slow it down at least. You have to have a lot more in your margin account to be able to do that. But I'm sure Larry Fink just, loaded up on Shanghai gold over American gold. And it just, it bothers me to no end. I just feel like I've got so much starch in my collar thinking about that man, and I don't wear a collar. You know what I'm saying? It's like a scratchy, itchy feeling, and it's not healthy what that man has done as far as amassing, cornering the ETF market like that and the funds. But anyway, I hope they're happy with their 4.5%, and I hope our equity market doesn't roll over much past that gap fill. It's healthy to have a pullback. We can expect one from time to time. 5% off of this top. We did get a new high. So if you look at the high, which was today, 60.25, that would be 300 points, 301.25. That would get you down to 57.23. All right. So that's right in your gap. Target reached 5% from the high today. So, so there you go. Put this on all charts. There we go. There's our targets. All right, kiddos. Plan A. Plan A is to keep it going forward, but plan B is 5% off the high. And then hope that they step in and buy that white line. They should. I'm kind of a little bit nervous about this lower white line, but anyway, that's that 90-day. This will shift around a little bit between now and then. This right here is pretty firm, 56.96. All right, I'm gonna let y'all guys go. We'll see you in the Globex session Sunday. I'll get something out. I'm also going to do some little bit of modifications to the report. Wasn't happy with the Globex or the report this morning. I tried to get a new template created that's going to be killer and couldn't use it because there were some issues with it that I will get fixed this weekend. But I do have um, structured, consistent product that I think you're going to really like because the Jats PT levels are what is so important. And making sure that you get the real Jats PT levels. I found that the AI engines were changing my levels at one point, which just sent me through the roof. They like to, you know, amalgamate or, change things to an annual basis, and they can't treat this like implied volatility. They have to stop. I have the number, they have to use it. So I have to get my report fixed. So I couldn't produce my report this morning. And I will get that done. And I think you're going to really like it. So Monday or Sunday, I think you'll look forward to the new and improved Jats PT Globex and then the RTH report, and try to streamline it for you and get it into a consistent product so that you see the same product each time and can go right to your section. Because I like to have, the information in a consistent manner so that if you want to get detail oriented, you know which section to go to for the details of under the hood. And if you just like the conclusion or a narrative paragraph on a subsection, you know where to go. That is what is so important, and I think you'll start appreciating it more. And if you have any suggestions, let me know. Otherwise, I'll carry on. I do have a report finalized that I would like to present to you if I can get the damn AI engine not to change it. And I think I'm there. I just have to fix my template. All right, we'll talk to you guys Sunday. Thank you so much. I appreciate it. Talk to you later.